stockbrokers. So I'm going with the fundamental, or is it technical, analysis. It's one of your fields, right? You're either a fundamentalist or a technical analyst. Now, whichever is your forte when you're doing analysis of a particular security, you look, one thing is clear, it's indisputable, and that is trend. But before I discuss about this particular trend, I want to share a story. When I first came to Nigeria, back to Nigeria in 2001, this was the era when banking licenses were 2 billion, I believe, and there was a bank that just got started. It was celebrating its first year, and it had its first year's accounts, and it declared profit. And there was a full paper advert with bar charts, and I'm wondering, how can you have bar charts when this is your first year? And it said something like, the trend looks good. But seriously speaking, the annual workshop, this is the second annual workshop. The first one, we had it at Lagos Oshun Hall. Now we are having it at the Congress Hall. The trend looks very good. And the only feedback I would have is that there were some of us that were seated in the first panel discussion where some people were wondering whether it is a monologue or a dialogue. Because all the discussions started on the high table and ended on the high table. I think next year we should probably make it more robust so that individuals can also contribute to the discussions. But I think we have started on a very good platform and a trend, and we will continue to discuss matters that are that are critical and of critical importance to our economy, and specifically the two subject matters of today's discussions. Power, certainly, if we were to fix that single infrastructure in Nigeria, the efficiency factor alone would be in the order of trillions. So, Madam DG, you can keep some of those for some of us that are near retirees. But seriously speaking, I think the efficiency factor of the power sector alone could be another pocket of money that we could utilize. But obviously it needs money to jumpstart it. So to the CIS, this is an excellent trend. Let's continue. Thank you.
Good. If it is, let's give him another round of applause, please. And so let's continue in that.
Slight difference in height from me.
Sorry.
It's a great pleasure to be here. To make a difference to this country, and I've looked at the numbers, and something struck a little bit jumps down my throat again, as it did in the conference I was in. I also noticed that Brazil, China, and South Africa finance power projects using less than 30% foreign capital. And what struck me was that your dependence on foreign capital shows how immature your capital market is. And so if we're sitting here today saying we need foreign capital to finance our power projects, permit me to say it means we're too lazy to think about financing it ourselves. And I'm saying that to you, my colleagues, stockbrokers, and I'm saying that to the investment banking industry as a whole, that really this is a major opportunity for us to change how we see ourselves and how everybody else outside this country sees us as well. So, for me, in wishing us a fantastic couple of hours, I would just want to ask 3 questions. that I hope many more will follow. First of all, for infrastructure, and the DG PENCOM raised some very exciting points this morning. And the exchange we had, some of the things that were pointed out was that the funding we have from PENCOM alone, in PENCOM they have funding that can be applied to relatively high-risk projects, and some funding that those of us in the approaching the grain stage might want to keep close by, and so we do not want to risk. And we also heard from the people on the power side, or the users of the capital, that some of their projects really are so cash flow assured that there's hardly any risk whatsoever. And some really do carry a certain amount of risk in them. So for us as a community, why is it not possible for us to identify the level of risk that is attached to each project and match it with the appropriate funds? So if you find a risky project, match it with funds that can take risk, the funds of those who I hope PENCOM would assist us in doing, the funds that have been raised from the 20-year-olds and the 30-year-olds. And for the low-risk, tolerant category, can we not find some low-risk investments for them to be channeled into? That's the first question. It would be good if we can arrive with an answer to that. Secondly, are the various companies that are going to be spun off from the whole transformation, various companies are going to come through, are these companies going to be entitled to pioneer status? If they are going to be entitled to pioneer status, should there not be a tie-in obligation for those companies to be publicly accessible, so that we don't go and start creating monopolies like we did with the telecoms industry? That's something that we should ask ourselves and answer as well. The third one is more of a comment than a question, but I think this is the second year. And to borrow a leaf from the previous speaker, the trend looks good. But should we not find a way of keeping score, even from now? One, of the questions, two, of the answers that we provide, and three, of the new innovation that comes up every year when we have these kind of meetings. Should we not find a way of keeping score, advising ourselves, and encouraging further development? These are the three questions I'll leave you with. I'll also leave you with a reminder. We have the cash in this country. We have the reserves in this country. We have the demand for investments in this country. All we need, all that is, we have the brain power, clearly, in this country. And in this room, I think, as we are now, I think even all those three are here. All that is left is the organization to bring both the requirements for funds and the providers of funds together. It is squarely on our shoulders as an investment, as the operator community. And so I'll just leave us with that last challenge, that we need innovation. We need to put on our thinking caps. And I'm so excited for this opportunity for us to be here, because I believe that by the time we rise from here, we would answer some of these questions, raise some more, and start working towards them. So, my President, I congratulate you on this August gathering, and I wish you very happy deliberations.
This is the second annual workshop, and I think the first I'm attending. And it's something gratifying that an effort is being made to harness individual efforts under a platform. And I must commend the Chartered Institute of Stockbrokers for that effort. I think it was 2 weeks ago when they came to PENCOM, and we had a very interesting conversation. And interesting in the fact that they were very clear in their minds where they were going with this, what they were seeking to achieve, and the part they expected PENCOM to play. And at that interaction, as this morning, I took pains to explain to them that contrary to conceptions that PENCOM is sitting on trillions and it's not deploying them, PENCOM is actually a regulator different from others because it's holding money in trust for the retired people. And it's not only incumbent on PENCOM to ensure fair returns on that money it's accumulated. It is imperative that the money is there when the retirees need it. I think this is the crux of the matter, and it is these kind of workshop, which is why I find it very good that the Chartered Institute is taking the lead in this, because it is interaction as well as information. We all need to engage, and because everybody, I believe, from their own perspective, mean well for the industry. PENCOM is poised to partner with the power sector, the housing sector, and any other infrastructural sector. The issue is how. How do we do it? And I'm hoping that this workshop will engineer such discussions. What safe modes we will create so that the pension funds can be channeled to development. The reason for the contributory pension system, which was a birth from the defined benefit system that wasn't working, it's to make sure that the primary aim, the primary objective, is that pensioners receive their retirement benefits as and when due. Investing in infrastructure is a secondary objective. And because that also benefits the RSA holder, that's retirement savings account holders, it is something we're also looking at. I am very confident that the people gathered in this room will be able to turn the conversation to what matters to me as much as a regulator, which is adequate investment vehicles for the pension funds. We have the session earlier this morning, we were talking about restriction of guidelines and all of that. PENCOM is constantly reviewing its guidelines. And the one that will be introduced very shortly, it's a multi-fund structure, whereby you have different kinds of investment, like the last speaker said, that will cater to the young. What my investment intent would be at age 25 is certainly different from what it will be at age 65. But we need to create vehicles for any and all the groups to find a circle in the investment. Having said that, I like the debate that is being generated. And it is true that anything we will do in terms of structure, in terms of improvements, is primarily our responsibility. And we need to take on that responsibility with a certain amount of innovation as well as caution. Because we have issues and instances where things have started very well, but have been unable to finish. And it's those bottlenecks that I need this workshop to look at while they're engaging in discussions. What is it that stops us from, because I don't believe we have a problem with starting things. The problem always ends in, did we finish right? Did the benefits accrue to those they ought to accrue to? If we can all address our minds to that, I am sure that we will come up with something that will be most applicable to the whole country as a whole. And I'd like everyone here to leave here with this one thing. I asked this question to the president and his team when they came. And the question was, how many of you in this room have retirement savings accounts? How many of the people itching to get at the pension funds are actual contributors? This 3 trillion is as a result of contributions by people. How many of you here? How many of the people, your companies, your associations, I said the same as the Nigerian Bar conference a couple of weeks back, how many of you are actually contributing own RSA accounts? How many employers are actually remitting their employees' funds as and when due? You see, if we can answer that question, well, I can see that it's not everybody that has the courage, because we have the records. The point is, you're all looking to assess this money. How many of you are looking to contribute to it? I think this is another point we all need to focus on. Thank you very much.
When she asked the question and I looked into the hall at the hands that were up, it shows. Thank you very much. I will appreciate that, ladies and gentlemen. Those two words, innovation and caution, is a DG.
The president of SEC here. For us at Bureau of Public Enterprises, we breathe reforms. We dream reforms. We dwell on it because in reforms lie the power to transform the Nigerian economy. We are seated down here and we have a baby that many people may not realize was midwifed by BPE. PENCOM is a product of the BPE's reform initiatives. Gone were those days when organizations deduct money from employees' salaries and spend it in recurrent expenditure because the money remained within the same organization. Part of our reform work drew our attention to this, and we saw the need to create a separate institution that separated the deductors of the money from the custodians and managers of the money. And today, we have over 3 trillion of stable deposit funds that has transformed the Nigerian financial market and has created the platform for stable, and eventually, in the next 20 to 30 years, we'll get to single-digit lending rates because we have very solid deposit base of pension funds. This is what is driving many economies, and this is what we should have benefited from if we had done this 60 years ago. People also forget that EFCC is a brainchild and a product of BP's reform initiatives. In our reform activities, we discovered that a lot of fraud was financial crimes were being perpetrated, which was making the Nigerian economy a last destination for investments. EFCC was the product of that. And EFCC started in BPE in one room with 100 million naira grant from BPE loan for takeoff. And I'm happy the EFCC has not forgotten. Just recently, they came and asked for permission to do a videotape of the very room where they started. I didn't hear a round of applause for that. People also don't realize that the Debt Management Office was a creation of the BP reform activities. While we were doing our job, we discovered that the country did not know how much it owed. Local governments could borrow from abroad, state governments could borrow from abroad, and so the nation didn't even know how much it was borrowing or how much it needed to pay out. That led to the creation of the Debt Management Office, and today Nigeria knows for sure how much domestic debts it has and how much external debts it has. And it has made it very easy for the country's economy to be better managed. I won't talk about the communications revolution. A few years back, we had only 6,000 fixed lines, and you had to go and queue at Tinubu Square to make an international call. Today, we have over 115 million lines in people's pockets and still counting. And like I mentioned earlier, over $40 billion of investment have come into this economy through the telecom sector alone. If the federal government was to budget for such kind of investments, it would probably take another 50 million years to do that. Reforms have taken root and have proven that they can change sectors and can change economies. We have now moved to the power sector, and we have snapped up over 2 billion in potential cash coming in to pay for the PHCN successor companies. And we're expecting some additional billions by the time we sell the NIPP power plants. Reforms have made the power sector an attractive haven for private capital. And we can assure you that in the next few months, we will see a transformation in the power sector once the private sector has taken over and is driving that sector. The power sector alone, we believe, given the deficit in power supply that we have, which is estimated at 40,000 megawatts, and we have barely 6,000, plus maybe another 5,000 coming on stream. Investments to fund the difference of 25 to 30,000 megawatts of power will move in a lot of capital into this country and will create jobs. And most importantly, the multiplier effect of stable power and its all-pervading influence on all segments of the economy will definitely turn this economy into a desired destination for investments, both locally and internationally. I've given you a background of past reforms, but we're also facing some other areas of reforms. We want to sensitize you on them. One, reforms in the transport sector. That is a major sector that impacts on also every aspect of the economy. Whatever it is you produce or do, transport has a contribution to the cost of doing business. And so we're now focusing on the transport sector. We have reform bills that have reached an advanced stage of processing. Like we did for telecom sector and the power sector, we want to achieve 3 or so basic objectives. 1, remove the monopoly status that confers the privilege of doing business in a particular sector to one monopoly organization. Take, for example, the Nigerian Railway Corporation. You cannot build a rail line except you are Nigerian Railway Corporation. So even state governments that have a desire to build railway lines are incapacitated from doing so because the environment is not right. The legal and regulatory framework is not correct. So we want to liberalize the sectors, number 1. Number 2, we want to separate policy making from regulation and from operation. The person doing the policy should not be in operation. The person doing the regulation should not also be a policy maker. And we found out that this has worked for the telecom sector and has worked for the power sector. And we believe it will also work for the transport sector. And the whole essence is to create an enabling environment for the private sector to bring in their capital into those sectors. Thirdly, it will create an independent regulatory agency with full powers of regulation of the activities in that sector to ensure fair play, to ensure international best standards, to ensure economic activities in that sector are fair and reasonable. So we have these bills. In the transport sector, we have the road bill, which will create a road authority and a road regulator. So very soon, all our economically viable roads will be available for concession. And I want to let you know that that's a big, big market, given the network of roads that we have in this country. I want to remind you that the Eurotunnel tunnel was built by private capital, not government funds. And I believe if we create an enabling environment for the Nigerian economy, we'll have tons of those kind of monies trooping into the Nigerian economy. We also have the railway bill, we have the inland waterways bill, and we have the ports and harbour bill. And then we have the Nigerian Transport Commission, which will be the intermodal regulatory agency. These bills, as I stand today, have been passed by the National Council on Privatization. They have been reviewed by the Attorney General of the Federation, and they are at the print stage for copies to be printed for presentation to the Federal Executive Council by the respective ministers that are responsible for those bills. Once the Federal Executive Council approves those bills, they will go to the National Assembly for enactment, and then we'll have the revolution in the transport sector. So I want you stockbrokers to prepare yourselves. Our reform transformation machine, driven by President Goodluck Jonathan, is going to focus on the transport sector and is going to turn around that sector for good. And once the enabling environment is created by the legal and regulatory framework and the correct policy initiatives, we shall see a transformation in the transport sector that will probably be bigger than that in the telecoms. As for the reform bills, we're also working on something that will stimulate the agri sector. Now, our agri sector is impeded by two elementary issues. One, unpredictability of prices of commodities. Two, lack of a defined buyer. All of you will remember the cassava initiative of a few years back. There was a lot of sensitization and mobilization of our people to grow cassava. Our people grew cassava, but then the prices were not right, and there was no defined buyer. Next season, everybody moved out, and that was the end of the cassava revolution. What we're working on, in collaboration with the Honorable Minister of Agriculture and the Minister of Trade and Investment, is we're working on harnessing the warehouses and silos that are scattered all over the country. There will be a basis for a warehouse depository receipt system. We'll tie that with the trading platform of the Abuja Commodities and Stock Exchange. And this will be privatized. The private sector will drive the warehousing receipt system. Already there's a bill in the National Assembly on the warehouse receipt trading system. We already have Abuja Commodities Exchange with the platform for trading. So a combination of these two will provide stability in prices, predictability in prices, which means a farmer can know from the beginning of the season what the price of his commodity will be at the end of the season. And he will know where to sell. The warehouse will be defined. He will go deposit his commodities and collect a receipt. He decides to sell it, trade on the receipt, or hold it for a greater period. What that means is that there will be stability and predictability of prices. There will be a defined buyer. Oil is a finite resource, but agri is an endless, everlasting resource. And Nigeria has the capable hands, a young generation. Once we're able to remove these two minor elementary impediments, we'll have what is rightfully going to be the green revolution of housing, to review the policies and the legal and regulatory framework in the housing sector. The end product of a project team that has been put together. We've already set up a project team that is made up of people from Ministry of Housing, Federal Housing Authority, BPE, and other key stakeholder agencies. And they've already started work, and we've received an inception report. We're beginning to define the variables, those forces that drive the power sector. And we hope to end up with a policy document, and if there's a need for it, a bill that will set up some form of regulatory framework, a legal and regulatory framework that will make the housing sector an attractive investment haven for private capital. We want to be able to galvanize the whole value chain in the housing sector from inputs for buildings, doors, hinges, and things like that, to be produced locally. What are those policy initiatives that need to be put in place to encourage private sector to go into production of marble, tiles, and all those housing-related industries? In the next 3 to 6 months, we shall come up with definite policy direction and legal and regulatory framework that will drive the housing sector. So look out for the housing sector. There's a lot of money to be made there. Brokers, I didn't hear a hand around there. I'm a broker, so I know when brokers smell money, they applaud. Can't you smell the money in housing? Finally, but not exhaustively all, I'll just limit it to these 4. We've also looked at the financial environment, and we've discovered that there's a dearth of long-term funding. Most of the funding that we're able to get from the Nigerian banking system is probably 5 to 7 years. And you cannot grow an economy on 5 to 7 years' money. There's need for long-term, stable financing. And that's where our development finance institutions come in and have a role to play. We're working with the Minister of Finance and the Coordinator of the Economy and other stakeholder agencies to look at how we can strengthen the development financial institutions so that they will be able to provide long-term funding. Already, Mr. President has approved a framework for the restructuring of the development finance institutions, and work has reached an advanced stage to consolidate them into one mega financial institution in the likes of the BNDES of Brazil and the German, similar German organization, so that this organization will be able to access stable long-term funding and on lend to other sectoral development institutions. So Bank of Industries and Bank of Agriculture and the mega institution will very soon be out there available for you to invest. These institutions will be privatized and will be driven by the private sector and will be able to access long-term funding and on lend to the Nigerian economy.
Motivated by heavenly ecstasy. It is that person. She loves her work and her people. One thing you can fault her on is that she has so much faith, so much determination, so much desire, so much hope. She is one person who everyone knows has a freshness and a sense of renewal in what she does. She's DG Sec. I present Ms. Arumelti.
Thank you, MC, for those very kind words. The president of the Chartered Institute of Stockbrokers, permit me to stand by the protocol that had been previously established, but also to deviate slightly, because I must acknowledge Chief Asiodu, who I will say is the father of economic transformation. And Senator Bajamo, who represented us ably in the legislature. I'm really delighted that you're here this morning. And to my professional father, Chief Dennis Odife. When the president talked about being from Chief Dennis Odife's school, I realized in this audience that I'm the oldest child who went to that school, and that Albert Okumaba also went to that school. But I do want to say something which you must applaud to. I don't know if Centerpoint still does it, but when I joined Centerpoint in 1985, they had an approach where the CEO met every staff that was joining. And I remember at that time, I had also interviewed with Unilever, with UBA and a number of others, and had offers in my back pocket. But was so fascinated by Chief Dennis Odife and wanted to do everything he'd ever done in life because I wanted to be like him, and chose to work for Centerpoint. And that foundation is probably why I'm who I am, or one of the reasons I'm who I am. So when I take on certain causes, please blame Chief Dennis Odife because he led the way in taking on those courses and laid a very strong foundation for me, both professionally and also not to forget my integrity and character when I come to work. So I really want you to applaud him specially for who I am. Thank you. Since my dear brother, Mr. Dickey, took 20 minutes and I'm supposed to do the keynote, I will take 40. So I just want to prepare you. I feel very strongly about the things I'm going to share with you. A lot of them basically reiterate some of what has been said, but I want to focus a lot of what I will say on the oil and gas sector, which is a theme this year, and we haven't spoken a lot about yet, and also the housing sector. And most people who know me know that I love and appreciate the housing sector, and I've spoken about the power sector until I've gone brown in the face. So hopefully I will not be saying a lot about it. But let me start, Mr. President, and my dear colleagues, brokers and all of that, to say that I am absolutely excited about today. And I'm excited about today because an idea which you had about making sure that we anchor what we do in the capital markets on knowledge is what we're seeing today. And even though we've only had a breakfast session and we're having an opening session, I think everyone who's been here has already been very enriched. And this is the second year of this national workshop, so you need to commend and applaud yourselves, brokers in this community. Thank you. Because I do think that the competitiveness of Nigeria will be dependent on knowledge. And as my dear sister, the DG of PENCOM, mentioned, Mrs. Anohu Amazu mentioned, information sharing, engagement is very, very critical. So I applaud you for leading the way for the capital markets in making sure that we're engaging and we're making sure that we're targeting the needs of our country. But as I said, I want to focus the comments that I'll make in this keynote on two areas: oil and gas. We all know that oil and gas makes up about 15% of our GDP. Basically, 90% of our export revenues and 80% of our government revenues. We know it is strategically important. We also know that it is a sector, despite being strategically important, that has not had sufficient investment. And I will share some thoughts with you about that. On housing, you know, people say it's a basic human need. I think it's a basic human right. And I hope that in the next few years, that the vision that Mr. Dickey has outlined is really what we will have. A country where people own a home soon after they come out of school. I mean, I remember when I first moved to the UK as an adult, I was shocked that everyone who came out of university, one of the things they were talking about was earning a home. Because I knew that my parents had worked for 30 years before they owned their own home. And if we can have transformation that changes such that what we do is have every Nigerian aspire as quickly as early in their lives to own a home, then I think we're just beginning. And the reason I say we're just beginning, because a house does not just give you shelter, as we all know. It gives you collateral to start a small business. And small business is what will create jobs that will give Nigerians dignity. But the whole value chain Mr. Dickey, as you pointed out, that goes from constructing a house to securitizing mortgages. That's what housing does. So it transforms economies. And I'm very, very happy that that's one of the areas that we're focusing on as a theme this year. Let me start by noting what you all know, because if you were not convinced, you wouldn't be gathered here today. There is no doubt that the capital markets play a critical role in economic development and wealth creation and wealth distribution. Because, of course, the capital markets provide medium to long-term capital, whether it be for development or for overall capital formation. But the area that we at the SEC have been focusing a lot on more recently is the role that the capital markets play in promoting good governance, transparency, accountability, because the capital markets bring things out in the open in ways that don't normally happen when you don't have public capital markets. But also what it does in efficient allocation of resources, because the good projects, the good things get the money, and not every project gets the money. The bad ones don't get funded. And of course, what it does for a nation like ours, which is a nation of people who are entrepreneurial by nature, and of course what it does in terms of job creation. So let me now focus on the oil and gas sector. To make the point, which I think has been made earlier, which is that one of the weaknesses of our economy is the absence of medium to long-term capital, the absence of sufficient medium to long-term capital. And what I hope is that one of the things that we will do by the end of this national workshop is to have thought through ways in which we can make sure that there's more funding that is applied to different sectors. You know, I was shocked reading the recent report by the African Development Bank, where they said Nigeria's infrastructure needs are $360 billion. $360 billion, which is more than the size of our GDP. GDP is about $300 billion, $275 billion. Of course, more than almost 4 times our national budget, which is about $30 billion. Of course, my dear sister DG Pencom, if we get some of the Pencom money, it will help. Because that's $20 billion that we need even just for infrastructure. And of course, we're still waiting for insurance to happen, because investable assets from insurance can also help make the difference. But let's focus on oil and gas. People have wondered how come we have an ambitious agenda of going from a market cap of about $100 billion when you combine bonds and equities to $1 trillion. And I say it's doable when Mr. Dickey's power companies list. Mr. Dickey, when the power companies list. And one of the reasons I keep referring to him is that when we first met, I walked up to him, I said, these power companies, we need a clause when they're handed over from the federal government to those who will run it. We need not to make the same mistakes that we made with the telecom companies. And you must make sure that this happens. And he says, my sister, I am a broker. That is where I started. This will happen. So, and I know that in some of the agreements, they've already worked in arrangements where some of these companies will come to the market. But we will have a $1 trillion market capitalization because power companies will list, telecom companies will list, but also oil and gas companies will list. Let me say that even though oil and gas in Nigeria today makes up 15% of our GDP, only 1%, they make up only 1% today in Nigeria's, in the Nigerian Stock Exchange market capitalization. Let's take the UK as a different example. The UK has 7 oil and gas companies listed on the London Stock Exchange. and they make up 15% of the market cap of the companies listed on the London Stock Exchange. So there is potential for us, even as a strategic sector, if we focused only on oil and gas, for that to happen. In fact, the most capitalized company on the London Stock Exchange is our own dear Shell, which has been doing business in Nigeria. So please help me to continue to encourage Shell, whether it be the gas company or Shell itself, that they need to consider listing on the Nigerian Stock Exchange. And of course, if they don't want to list, they can also have their shares traded on the NASD platform, which, as many of you have seen, was launched yesterday. Let us take the energy sector in Norway. The energy sector accounts on the Oslo Stock Exchange for half of the capitalization. Norway is the world's third largest gas exporter, the fifth largest oil exporter. The fifth largest oil exporter. It's of course known as a leading nation in oil and gas, but I think we should be known as a leading nation in oil and gas in every sense of the word. This is reflected in the Oslo Stock Exchange in terms of number of companies that are listed. Oslo is the second largest in Europe in energy in the continent. Our daily production fluctuates from 1.8 to 2.1 million barrels per day. We have the 10th largest global oil reserves, and we have the 12th largest gas reserves. But just like power, oil and gas has multiplier effects because of the support that it gives to, it's an input to power, but also very important for steel, for petrochemical and others. But listen to this. According to Wood Mackenzie, in 2010, Nigeria had 8 exploration and appraisal wells that were drilled in 2010. And in 2011, we had 3. Compare this to Norway, 55, and Angola, 17 in 2011. And I would like to use Norway as a good benchmark for Nigeria because it has the equivalent amount of daily production, about 2 billion barrels per day. But it's investing 20 times more than us in exploration. Angola is doing the same as Norway, and so if we don't take care, it will displace us as the largest oil producer in Africa. In some years in the past, it has displaced us, but with what they're doing today in Angola, if we don't take care and look at how we can redress this, it will certainly displace us. People have heard about what's happened in the downstream sector, that there's not been adequate investment in oil refining. I believe that a lot of this is coming from the current financing structure of oil and gas projects, particularly upstream. I believe the joint venture model is incapable of supplying the vast sums of investments needed in the oil and gas sector. NNPC has joint venture arrangements with international oil companies, where it is typically the majority holder. Joint ventures are structured in such a way that funding for projects is contributed in proportion to each party's participating interest. Over the years, NNPC itself has acknowledged difficulties in meeting up its own part of these funding needs. Of course, NNPC has indicated commitment to tackle this challenge, and I was pleased to read in the papers that they are looking at issuing in the bond markets starting in 2016. There's no doubt that the level of investment required, whether it be in upstream or downstream sectors, are enormous, and certainly outsizes the current purse of our national oil company. Indeed, even the international oil companies and the indigenous companies will find it challenging if they're relying on their own pocketbooks to build refineries or to develop fields. So there is no doubt that if anybody is serious in the oil and gas sector, they need to come to the capital markets. The capital markets is open because it's got cheap, medium to long-term resources available. There are, of course, many ways in which, whether it be NNPC, whether it be oil and gas companies, can access the market. Let's take, for example, Mobil Producing Nigeria and NNPC. They operate a joint venture with a capacity of 550,000 barrels per day of crude oil, condensate, and gas liquids. The NNPC is usually required to supply counterpart funding for projects within the oil fields that make up this joint operation. Projects have stalled due to the unavailability of funds on the part of NNPC. Apart from assessing the bond market, NNPC could successfully finance such commitments through securitization. On the basis of future cash flows expected from the daily production of the 550,000 barrels per day for this joint operation, NNPC could get funds today from the capital markets to finance these projects. So NNPC, leveraging the capital markets, can basically finance some of its joint operations that it has difficulties in the past doing. But as I said, one of the reasons we're also advocating for oil companies, oil and gas companies, to come to the market is because we believe that markets provide a higher standard of transparency, accountability, and corporate governance. And you know today around the world, there is a clamor for greater transparency in the operation of companies, particularly in the oil and gas sector. Evidence suggests that the market gives a higher value to companies that are open about the nature of their operations and the extent of their risk exposure. I think it was Robert Eccles, author of Building Public Trust, The Value Reporting Revolution, where he showed that fuller disclosure wins more trust with investors. Relevant and reliable information means less risk to investors and thus a lower cost of capital, which naturally translates into higher valuations on the exchange. Maybe you think Oslo is Europe. Let me take Ghana. Ghana is a much smaller market than ours, but many of you will remember in 2011 when Tullow Oil listed on the Ghanaian Stock Exchange. It immediately brought $18 billion of market value of Tullow to the Ghanaian Stock Exchange and doubled the market capitalization of Ghana. It had already listed in London, in Ireland, and its third listing was in Ghana. Nigeria can leverage its vast oil and gas resources to create a global market that welcomes international energy firms, not just firms that are doing business in Nigeria, just like Toronto Stock Exchange does, which, as many of you know, is a leading marketplace for oil and gas. It has about 394 oil and gas issuers as at the end of 2012, which was the highest in the world. So think about the possibilities. We're just asking the companies who have been making money in Nigeria to list, but the possibility for the largest producer of oil and gas in Africa to host a capital market that is focused on oil and gas is there. But let's start first with getting our own companies to list on the Nigerian Stock Exchange or on the alternative platform of NASD. I had already mentioned my passionate belief about the impact of housing on any society. As I said, housing is not just valuable as shelter, but also as collateral. In advanced economies, collateralization of assets plays a key role in supporting arm's-length transaction, in transforming the banking sector, and transforming the capital market. Collateral is the bedrock on which much of the financial system operates. Many of you are familiar with Hernando de Soto's book, The Mystery of Capital. He points out the immense amount of untapped capital that exists in low-income countries. For example, in Egypt, the wealth the poor have accumulated is worth 50 times as much as the sum of all the direct foreign investments ever recorded there, including that spent on building the Suez Canal and the Aswan Dam. So when Mr. Jomale talks about us focusing also on the capital from within Nigeria, you can understand how so powerful it is when we look at our own resources that we've mobilized. Much of that wealth is hidden in what we call debt capital. He argues that poor countries have yet to establish and normalize the invisible network of laws that turn assets from debt into liquid capital. He points out the importance of strengthening property laws in these countries in order to allow asset collateralization. The capital market helps unlock this debt capital. The opportunity is enormous that the capital markets provide. Let me talk about the importance of collateral by taking the US, which we're all very familiar with, as an example. The Securities Industry and Financial Markets Association estimates that there were nearly $13.7 trillion worth of mortgages outstanding in 2011, which was 90% of US annual nominal GDP. I know that some of us sitting in the room contribute to that because a number of people own mortgages and own houses in the US. But $13.7 trillion, I didn't say naira. 90% of America's $15 trillion GDP. These contracts are based upon housing, which serves as a collateral in the event of default. So in transforming the Nigerian economy, leveraging what housing does is amazing, because it means that if you're trying to have Nigerians all participate in the economy, the one thing that you can use to ensure that we don't default on transactions is the houses that we own. Let us take some other examples. In the UK, outstanding loans, mortgage loans, is 80% of GDP. In Hong Kong, it is 50%. In Malaysia, it is 33%. In our own case, if you stretch it, it is 0.5% of GDP. So this housing revolution is critical. The United States government created the Federal Housing Authority as part of the New Deal. And that's why I was very glad to meet Ms. Adeze Aguele. I hear there's a new team, dynamic team, at the Federal Housing Authority. So I hope you're hearing all of us about what people need to do to transform the Housing Authority. But let's go back to the New Deal. And many of you, I mean, most of us, none of us was actually alive when the New Deal happened. I think it was Franklin Roosevelt who talked about the New Deal. Sorry? Nobody was. Chifasiodu, who were you? You look very young, or we have to check. But when the New Deal, as many of you will remember, as part of the New Deal, the Federal Housing Authority was created in the United States to assist in the construction, acquisition, and rehabilitation of residential properties for Americans. You'll also remember that, of course, Fannie Mae was created to create a liquid secondary market for mortgages. All of this freed up the books of loan originators and permitted them to create even more loans. The ripple effect was phenomenal. The impact of the construction boom on employment was immediate, and financial innovation led to the creation of mortgage-backed securities. The growth of mortgage-backed securities in the US and the housing market boom attracted other countries in the developed world to emulate the US. Emerging countries also implemented similar policies up until recently, when this whole thing was abused, which of course was what led to the financial crisis. And of course, what it was poor governance and poor risk management. I think everybody agrees that if you have a housing sector where you are focused on providing shelter to your population, but at the same time of providing a financial system that allows the loan originators to be able to do it at a reasonable cost, the effects for any economy are transformational. I'm therefore very proud that under the leadership of the coordinating Minister of the Economy, along with the Minister of Housing, that there are a number of such initiatives that are ongoing today. Mr. Dickey talked about some of what they're working on with the Federal Mortgage Bank and other entities. But I'm very pleased to note that there is ongoing work to set up a mortgage refinancing company later on this year. And the plan is that we will have 200,000 mortgages every year for each of the first 5 years. And the World Bank is already committing to providing a facility of $300 million at zero interest rate for 40 years with a 10-year grace period to support this initiative. Our capital market has the potential to meet these needs. People say that a lot of what we've read suggests that the housing deficit in Nigeria is about 18 million units. And one of what is being thought about is that if we start with 200,000 per year, that hopefully, as we gain experience in Nigeria, that we can scale up. Because as you know, President Lula in Brazil decided that they would build 1 million units of housing for their people every year, and they achieved that. This is one of the key planks of President Goodluck Ebele's administration. And when he's not just talking, actions are being taken to try and address this. Of course, one of the challenges will be issues of titling and the Land Use Act. And I know that there is efforts being made to try and remove the Land Use Act from the Constitution so that it can have the flexibility that you need when you're trying to transform a sector. We at the SEC, on our own part, have taken initiatives which are starting to help the housing sector. The one that I want to speak about is the Real Estate Investment Trust, which, as you know, enables people to invest in the real estate sector. In Nigeria, the first REIT, Real Estate Investment Trust, was launched in 2008. Since then, the product has grown slowly with only 2 REITs. What we've done recently is to review our rules to make it much easier for growth in this sector. Today, we recognize an investment in a real estate investment trust as a real investment in the landed property itself. This has implications for taxes, which is one of the issues that we had been told about. It also has implications for the bottleneck in terms of transferring title, because this is a key challenge in the housing sector. What we expect to see is that as more rates are floated in the market, massive investments in housing are expected. We'll also have jobs be created all along the value chain. Let me go back. I've talked about the potential if the oil and gas sector focuses on the capital market. I've also talked about the potential for housing to transform our country if we focus on the housing sector. But I also just want to talk about the global energy outlook as a way to highlight that beyond, to try and reinforce the point that Mr. Dickey made about the fact that we are still very oil dependent. and the importance of diversifying our economy and to treat it as a matter of urgency. I don't know if anybody read the article on the back of Business Day yesterday, which talked about shale oil and tight oil. But suffice it to say that the US has been working tirelessly to try and gain energy independence. And of course, that's affected us as a country because we're, I think, the 5th largest supplier of oil to the US. In the US, certainly by 2020, will be fuel sufficient. From what some people say it could even be earlier. And of course, that's because of both tight oil and shale oil, which can be produced at a cost of $40 to $60. They will be competitive if it's priced at $40 to $60. And today, we're basically enjoying global oil prices of approximately $100 per barrel. So it is very imminent that we think about diversifying our economy, and I believe that the work that's happening in the power sector, the work that's happening in housing, in agriculture, is very, very critical to this. But I think that we need to do it with a sense of urgency. And I believe the capital markets helps us create that sense of urgency. Because, of course, if we're relying on trying to address these huge needs from ordinary budgets of the federal government, of the states, or of companies, we will not be able to move as quickly as we should. And therefore, that's why this is this initiative of the Chartered Institute of Stockbrokers is not just an initiative that is being done just for the capital markets. It's because of a concern for the huge and urgent needs of our country, whether it be in terms of the size of the needs, whether it be in terms of having an economy that truly should take its place as an economy that has best governance practice, or an economy where Nigerians can feel that they're participating in the economy. So it's not just the pocketbooks of the brokers or the Chartered Institute of Stockbrokers. It's a care and concern for Nigeria. And I hope that you will all be evangelists to try and ensure that people understand the value that the Nigerian capital market brings to transforming our society. Let me end by saying what Mr. Booker said: the trend is looking good. Let me be better than he said and say that the trend is good. And I'm not saying about the trend for us participating in the CIS workshop. I'm saying about the trend for the capital markets, but most importantly, the trend for Nigeria. I'm excited about the possibilities. I'm excited about the possibilities, but I really believe that it's up to each and every one of us Nigerians, but most importantly, you who have been converted. Thank you.